Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, March the 15th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal, where I've commented on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement into your own portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios. Therefore, what I'm doing could be counterintuitive to what you are already doing. Having that out of the way, we do have quite a bit of economic data coming out today here in the U.S. We did have core retail sales, which is minus autos, and that came in at negative 0.1%, was expected negative 0.2%. That is core retail sales is considered to be a better judgment of retail spending, just because autos can be very sporadic and volatile, if you will. We also had PPI, which is Producer Price Index, came in at negative 0.2%, just in line with expectations. We had retail sales come in line with expectations. Core PPI, which is Core Producer Price Index, which is minus food and energy, which is considered to be one of the ones that they really look at rather than just the regular PPI headline number, and that came in slightly lower than expected. And Empire State Manufacturing Index came in a little bit better than expected. It was actually expected negative 10.3, and it came out at just 0.6, so slightly better, or a lot better than expected. And NAHB Housing Market Index came in at 58 versus 59, so slightly lower than expected there. But all in all, with that Empire State Manufacturing Index came in a little bit better than expected. I just have up a chart here of crude oil because we've been keeping an eye on this. I said as soon as it came above 50, it was going to trade up into the 38, and that's what it's done. It's traded through that, but there's just a glut of oil out there, and I think people are realizing that there's just no hope for crude oil here anytime soon, especially with Iran, like I talked about yesterday, ramping up production to get in line with what they knew before the international sanctions came around. Onto the NASDAQ right here. This is pretty important because yesterday we talked about the volume was down here where we're trading now, but the time spent was up here. Now that has migrated down and are overlapping, so that just means that that value is really starting to be perceived right here where we are. So going into this quadruple witching, which is Friday, and quadruple witching is just with the stocks and the options on stocks and things of that nature, but futures also. So that is also expiring, which makes it the quadruple witching, which happens every quarter for that quarter end. And as you can see here, NASDAQ only down about 7-8 points earlier today. They were down about close to 20, I believe. Anyway, E-mini S&P's kind of lagging that whole NASDAQ push higher, as you can see here just on the chart, down about 10 points right now. Their value area is still well above where we are right now, above in 2000 area. So that we are just below 2000, but it's up there at 2009-ish. So it's going to be a lot of work to get back up there. This is the intraday chart of the E-mini S&Ps. As you can see, after yesterday's closed overnight, we just kind of sold off, and now just trading sideways. It's a very benign market overall, not a whole lot of range going on, and pretty quiet for the most part. Like I said, with triple witching, things can either settle down or get very volatile as people, as the closer we get to that expiration happens, because people start jockeying for their positions to try and get things done. With the trade that I put on, gearing up for these earnings trades that are coming down the pipe at the end of April, and what I'm doing is setting up these trades right now, so I can have the opportunity to basically have on a long option for free. We did the option contracts in the call side last Friday, so you can go to protraderstrategies.com and find that out. This week we are going to be doing the same strategy but using the puts, so you can find out all the rules and how I set these up for the earnings, a month in advance, to try and get some of these long options on for free. So it's just kind of a free shot at these earnings trades. So you can go to protraderstrategies.com and find that out. What I did in here is the April 1 weeklies with the April 4 weeklies, and I sold the April 1 weeklies, I sold the 30 puts, and then in the April 4 weeklies I bought the April 30 puts and paid 29 cents for that. So if I can roll that short put out again, I might be able to get this long put on for free, because I financed half of the cost of that put with the first transaction. Now hopefully with the next transaction I will be able to have that put option on for the earnings trade, for the earnings event, for free. So that's what I'm looking at for that trade. That's about all I got for you guys today. Go to protraderstrategies.com and check that out. And one other thing, next Monday I'm gonna be doing that round table with timing research show. So there's gonna be like 4 different traders on there talking about what they see the economic, geopolitical, and market doing in the next week. So check that out too. That's all I got for you guys today, other than if you can't take that, take it easy.